Hey, I just wanted to do an extremely boring video on property taxes here in Florida. So if you're buying a house for the first time, or you're selling and then buying a new one and you're porting over your Florida homestead exemption, I'll explain how that works and how you will benefit from it because it will lower your taxes substantially. So stick around. Here we have a property. I'm not really trying to share the address or really hide it that much, but I wanted to show you what these three things mean here because anybody can pull up public records like this for any property. Here you can see over the last 5 years where the just market value here and how everything goes up, right? Especially in this recent market. So there's the just market value, which is what the county appraiser thinks the fair market value of your home is, right? And usually that's not truly what it really is. They're estimating low. If you go down and you see the total assessed value, that's basically what they have assessed your property to be. It's like the starting point for taxes, right? So they're not taxing you off of 463. They would be taxing you off of 228. However, if you have a homestead exemption, which this one does, they marked it yes. They've gone through the application, which is due March 1st, 2026. Every year, March 1st, get it done. If it's your primary, they have total exemptions. So you can see somehow it changed. So some exemptions were added. But right now in 2025, there's a 60,000. So what you're doing to figure out the actual taxable value of your house, you are going to do basically the total assessed minus your exemptions, which equals 228 minus 60 is the 167. And so that is what the taxes will be based off of for that year. Now that's great if you're buying a house for the first time. That's how that works. Now let me show you how to assess taxes yourself. This is in Pasco County. So we're going to go over to Pasco County and let's just say you're buying this house now for $575,000. So you can see how 463 is what the county has assessed it as fair market value. But you can see the fair market value is actually much closer to 575. So that's already low. So if we go to calculate, we're going to go down and we will see almost $10,000 a year in taxes, right? So, or actually, I'm sorry. That is for the ad valorem taxes. So if you go to the total, it's almost, it is 10,000 basically. So once you factor in your trash and sewage and all that stuff. So now let's factor in if you have a homestead exemption, and that'll take off, if you're married, it'll take off about $50,000. And that, it reduces your taxes by almost $1,000 a year, which is not that much, but it helps, I guess. Now the real benefit of when you buy a house and you had it for a while, you are capped at a 3% increase a year when you have the homestead exemption. So if your property, like the last 5 years, went up 15 to 20% each year for a couple of years, you're still like way back here, and taxes, if you bought again, would be right over here. So if you want to save this difference and then the tax valuation of your next property, it's like you're selling, and when you buy another property, your taxes will get reassessed on purchase starting January 1st the following year. So if you want to save the difference, what you do, you have to do portability, right? So you click the portability button. Let's say your just value, which is this right here, the market value is, I'm putting down here just a different number, but let's say you're selling a house, your old home, and its just value is 365, but its taxable value, which is right here, or total assessed value. See, all these terms, they really throw you off. Your total assessed value, which is what is the starting point for taxes, is 235. If we check that, and now let's calculate it. And now it reduces your taxes down to $7,000. That saves you over $2,000 a year from porting over your old homestead exemption. So owning property early on, letting prices rise, it'll save you over. You can capture that tax savings and port it over. And a lot of people know that, some people don't. So I wanted to throw that out there. Now, if you're an investor, you don't get the homestead exemption. So if you're an investor, you don't have the 3% cap, you don't have the homestead exemption, and the 3% cap each year. It's like, if your home jumps up in value by 20%, you're not going to be paying extra 20% in taxes the following year. You'll pay 3% cap. If you're an investor, you don't have that. So every single year you can pay the full market valuation of taxes, and it can move with that every single year. Now, if you're an investor, there is a cap, but it's 10%. So unless you're going through some extremely upside, like bull market scenarios like we did with COVID, where it went up 15 to 20% a year, you're paying up to 10% increase per year. Or I should say the cap is 10%. So over the course of 3 years, you're right back to where market value is. And you don't have the portability feature as well for any investment home or second home. So just keep that in mind. Your taxes will basically be market rate every single year. This is why I tell people not to look at what the sellers are paying in taxes, because it's almost never what you're going to be paying. If you're an investor, you are like 99% of the time going to be paying more than what they're paying. And if you're a homeowner who's looking to move there and you have another home, you're porting over your tax savings essentially, then you'll likely be paying far less, but it's almost never what they're paying. And it's kind of deceiving to look at what they're paying and be like, oh, okay, my taxes are pretty low with this property, but 3 doors down, it's way higher. Well, now you know why. Some people pay more, some people pay less, depends on where they come from, what their percent cap is, and when they bought the property. If you bought the property 20 years ago, your taxes, 3% a year, you may be really low, but a property that was just purchased recently has been reassessed recently, even with the exemptions and porting over some savings, it's still going to be higher than, probably what the last person was paying. So after all of this, does any of it even matter? Because in 2026, the next vote in Florida, there's going to be a question on the ballot, and we don't know exactly what that question is going to be. DeSantis, in some recent news, has indicated that it's going to be a question to basically entirely remove property taxes for those with homestead exemptions only. Now, I don't know exactly if that's what it is, if it's confirmed, if it'll look different, if it's just cuts, but or if there'll be multiple proposals. Hopefully there will just be one, because multiple proposals would basically confiscate everything and confuse everybody, and we'll probably get nowhere. But anyway, all that being said, if this does pass, we need 60% in Florida to be a super majority to pass it. And then depending on what it actually is, it will likely only apply to primary homeowners or primary occupants, locals here in Florida, anybody with a homestead exemption. So that means investors, second homeowners, that won't apply to your property, unfortunately.